All right, guys. So I'm going to talk today about the state of Avalanche. So really where we are as a market, where Avalanche is, how Avalanche compares to its competitors, kind of the good, the bad, and where Avalanche is going, all from a data-driven perspective. So my goal is to show you guys more charts in this presentation than anyone else here. And if I do that, I think I accomplished my job. So let's start with where we are, the state of crypto in May 2023. It's bad. We had all of the blowups last year from Luna to 3AC to Genesis to FTX. Macro is pretty bad. The cost of capital is high. Retail is not here. Institutions are spooked, right? So we're in kind of an overall bad situation, right? If we look at the market, this is overall crypto fundraising. If you look at from where we were in November of last year to where we are today, we're down almost 95%. Trading volumes are falling across the board. Crypto Twitter participation, which I'm sure many of you guys participate in, has fallen by more than 50%. So, from a retail perspective, from an institutional perspective, we've really fallen off the board. And I think it's important to have that context when we talk about Avalanche and Avalanche data and adoption, right? The fact that the market broadly has fallen off. So where are we today with Avalanche? So, from a high-level perspective, this is key metrics from April 2023. There are about 44,000 addresses on the C chain that were active on a daily basis, 51 million transactions, $1 billion in TVL, $55 million in daily DEX volume, and only about $28,000 in average daily NFT marketplace volume. But one thing that we've noticed, which has been a kind of a great turn, is monthly active addresses on Avalanche almost doubled last month. So we're seeing a really big spike in activity both on the C chain and on general subnet usage. And that was over the same time where Ethereum monthly active users fell by 10%. So we didn't see growth across the board, but Avalanche specifically saw massive growth in activity on the chain. And for perspective, Avalanche is still relatively small, right? There are about 800,000 active addresses on Avalanche over the last month versus a little over 12 million for ETH. So there's still a long way that Avalanche can go, but obviously seeing a doubling in activity is incredibly significant. Another thing that we noticed is increase in gas fees. And increased gas fees, that reflects computational demand on the Avalanche network. And in mid-April, we actually saw the highest spike in daily burn fees since May 2022. So really seeing, an increase in usage around Avalanche, increase the number of active addresses. And what I think is even more, interesting to look at is the fact that while C-Chain still accounts for the lion's share of activity on Avalanche, from May 2022 until now, so about a year, we've seen a massive increase in usage of subnets. So, over that period of time where both C-Chain and subnets have seen increases in the number of users, subnets, growth is even more significant. There are about 58 subnets that have now launched, but there are a significant number of more subnets coming. So we're seeing, broadly speaking, a very significant growth in the number of active addresses on Avalanche, and a significant number of that is actually being driven by subnet adoption. And so, the next question is, well, where is that activity coming from? So today, primarily, I'm looking specifically at C-Chain activity. The majority of activity on Avalanche is coming from DeFi applications. So GameFi and NFT applications also exist, but if you look, yellow is other uncategorized transactions, red is DeFi. So it's, kind of accounting for the lion's share of activity that exists on Avalanche today. And so how do we get here, right? And I think this is a story of the dominance and growth of Avalanche DeFi. So, the top projects that exist on Avalanche today are all really core DeFi service providers. Aave is deployed on Avalanche, and there's also, native tokens to Avalanche like Trader Joe that have seen, growth in TVL. But the majority of the market is really driven by two projects, which is Trader Joe and GMX from a DEX perspective, right? Where, they're seeing the vast majority of trading volume. So one of the things that I find really interesting about DeFi on Avalanche, especially as we compare that to broader C-Chain usage, is actually looking in retention. So if we start to look at, well, among all of the wallets that have ever interacted with Avalanche, what percentage of those wallets are coming back after month 1, 2, 3, 4, 5? If you'll notice on the left sidebar here, on the left side, I'm looking at retention on the C-Chain more broadly, right? And what you'll start to notice is the cohorts are pretty big, right? So that's that's the number of users, right? But after a couple months, we start to see about 10, 15% of those users come back. But if we look at DeFi, while Avalanche DeFi is a smaller number of wallets that are interacting with it, they're actually being retained at an incredibly high rate. We're seeing about 30% of wallets that interacted with Avalanche DeFi in December 2020 coming back. And so while the sheer number of wallets that are interacting with Avalanche DeFi is relatively small, they're being retained at a very high rate. And I think what's really interesting to note is that the long-term retention of Avalanche DeFi users is actually growing. So, if you look, earlier, or if you look last year, you'd see about 20% of users back or 25% of users back after 3 or 4 months. That number has gone to about 30%. And so the question is, well, how does that compare to other chains, right? And so if we look at Ethereum as a proxy, here, I know the charts are different. I took this one from the TIE terminal. But here what I'm doing is I'm looking at Uniswap retention. And what's really interesting is, from the December 2022 cohort, which is right here, you'll notice that about, only 15% of those users are still active. But if we compare that to Avalanche DeFi, it's closer to about 30%. So Avalanche has clearly done, a very good job at actually retaining its user base. And if you compare that, to other assets, even Aave on Ethereum, it's about 25%, or SushiSwap, it's 15 to 20%. So across the board, Avalanche is actually doing a better job at retaining DeFi, and DeFi is a very significant, portion of the market on Avalanche, or of usage of Avalanche. So where is Avalanche outperforming peers, right? Looking at other chains. So I think one of the really interesting things to look at is, monthly transactions change. So Avalanche actually saw the biggest drop off in transactions post FTX collapse. So you can see Avalanche is the red line. Transaction count, went down, but Avalanche has actually recovered very significantly, and transactions on Avalanche are actually up 15% relative to November 2022. So despite the market selling off, despite less people talking about crypto, despite less trading volume, Avalanche has actually seen a really big recovery. The only asset that's actually outperformed Avalanche from a monthly transactions perspective is Arbitrum, which has obviously been getting a lot of conversations. Seeing a lot of conversation around its token launch. And so what about now? What's going on in April? And so I think one of the really interesting things, I know the colors are changing, so I apologize, but orange is Avalanche. Avalanche actually saw, really significant growth in, the number of unique active addresses. So that was kind of that first chart that I showed you, right? If you look at Avalanche versus its peers, a number of projects actually saw a decrease in the number of users, such as Ethereum, in April of this year. But Avalanche saw almost a doubling in terms of the number of active addresses, as well as in transactional growth. So while Avalanche isn't the best performing, it's the second best performing layer one in terms of transaction growth post FTX. In April, Avalanche is blue in this case. I'm sorry, all the colors are changing. But Avalanche is blue in this case. Not only do we see more active addresses, but we saw more transactions as well. And kind of the last thing I think that I'm going to hit on here from a data perspective on kind of where Avalanche is outperforming is from a development perspective. So Avalanche is the third most active chain in terms of developer commits, and also has a very significant number of active developers and a big development community as well. So, Avalanche is seeing a growth in transactions, seeing a growth in active addresses, it's seeing a very robust development community, and it's also seeing incredible retention around DeFi. And to kind of spotlight a specific project, a lot of that activity actually came from Stargate Finance, which saw a massive rise in activity on the C chain in April, which might suggest that Avalanche is starting to find product market fit as a low fee and scalable blockchain. So what are some areas for improvement? So, we obviously talked about the good, but there's always, there's always the other side of the equation. And I think, the one area where Avalanche has struggled versus others is probably from an NFT perspective, right? I mentioned earlier NFT daily activity was, $26,000 in April versus about $55 million for DeFi, right? So it's significantly lower, and we're seeing a big drop off. But I think it's important to caveat that with the fact that, broadly speaking, the DeFi market has gotten totally destroyed, right? We're seeing a 90% drop in activity on DeFi, across Ethereum and other chains as well. And so I think, one of the things that Avalanche has done, and they've announced, is Avalanche. There's obviously a huge push here to increase activity in NFTs. But I think one of the really interesting things that we noticed is while NFT trading is low, one of the things which has been really high and which saw massive surging was NFT minting in April, and particularly some interest in utility NFTs such as POAPs. And one of the things that we noticed was that the Galaxy NFT platform is actually drove a very significant share of that minting activity. So, trading volumes are low, but with the new initiative, Avalanche, and with kind of increased minting, it's kind of something interesting to monitor over time. I think the other thing which is really important, and I want to caveat this by saying that there are plenty of people that are better to speak to on this topic than me, such as this guy sitting in the first row right here. But I think one of the really exciting things is, Avalanche warp messaging really being fully mature and the ability to basically bring liquidity from C-chain to subnets, right? I think that's, we're seeing Avalanche is doing a really good job in terms of retaining its DeFi users. But once those DeFi users can access all of the liquidity on Avalanche from specific subnets, I think that's something that's going to be really exciting, and I think we'll see, hopefully a big, increase in the amount of, DeFi activity, not just from a transactional count, but also from a TVL count on Avalanche C-chain, but also on subnets. It's something that's being addressed actively through Cortina. And so I think something to also consider is, with that upgrade happening, right, and with, kind of this interest in DeFi, this spike in subnets, right, we've seen, subnets go from 9% of activity on Avalanche to 24%. There are now, 54 subnets on Avalanche with a large number of other ones coming. The question is, well, what impact does that have? And I think, obviously there's the security aspect of it, but I think the more interesting one is the economic aspect of it, right? This is very crude, very, very crude. So keep that in mind. But really thinking about okay, well, if these subnets come online more, how is it actually going to impact a Vox price, right? And so a very, very crude way to think about it, right, is you need about 2,000 Vox per validator, to support a subnet. And so if you think about it, right, if you assume, that a particular subnet is going to attract a certain number of validators, right, you can kind of assume what basically the change in supply would be, right? And you're thinking, in terms of a supply and demand equation, but if we have 10,000 validators, all of a sudden there's 2 million Avalanche, which is out of the supply, right? Which is going to have a material impact on Avalanche in the future. And so kind of some final thoughts here and what to watch for on the horizon. So, at a very high level, Avalanche active addresses have doubled over the last month. And its on-chain activity and developer activity has outpaced peers and experienced robustness. As this kind of subnet narrative plays out, we anticipate increased demand for the token and the ecosystem. And the question is then, well, what are those drivers of subnet adoption? Where is that going to come from? And so the first thing I want to plug, I'm going to do a couple plugs here, is we do quarterly calls at the Avalanche with these two beautiful people, Luigi and Morgan. I think we'll be, getting a few more folks to participate. They can speak to these topics a lot better than I can, so definitely watch that. This video is Avalanche Q2 2023 State of the Ecosystem, really talking about where Avalanche is going, what the opportunities for Avalanche are. So these are some kind of highlights that I pulled out of there. But obviously, these folks think about this day in and day out, and they can probably speak to this a little bit better than I can. And so, kind of what are those different things that are really important, right? And so, one of them is, the introduction of the first elastic subnets, right? The growth of Avalanche warp messaging, which I talked about, which is going to enable, the growth of subnets such as DexLot, which is now, just launched. The other thing, which I'll give Avalanche a shout out on, is the institutional subnet adoption. I think that's a narrative that's going to play out, broadly speaking around crypto. RWAs has really taken hold, and Avalanche obviously partnered with a number of large financial institutions just a couple of weeks ago. And so as, evergreen subnets roll out, I think that's going to increase the demand for subnets and obviously usage. And I think as a percentage of total activity on Avalanche, I think, subnets will increase as a result of this. And I think the last thing to talk about, one of the things I didn't show is gaming, right? So GameFi on Avalanche, with the exception of DeFi Kingdoms, is relatively nascent, right? There's really not that much activity, but, I think something that people miss often is that AAA games take years and years and years to develop, right? It's not like Call of Duty was built in 6 months, right? Big AAA games could take 5, 6, 7 years, and Avalanche has a number of those games which are going live, whether that's Shrapnel, Gunzilla, and other games. And so I think that's something to kind of take a look at and watch into the future. And so, I think, a combination of these different things is something that's interesting to watch, to see how subnets, subnet activity increases. And so, kind of my last plug here is, you can actually get a lot of this data for free. So, we've worked with Kevin and the Avalanche team and actually made a ton of this data available for free, and it will be available in a number of different places. So if you want to track the adoption of DeFi over time, GameFi, NFTs on Avalanche, you can go to our free public-facing dashboard, which is avalanche.thetau.io. And for anybody who's looking for more in-depth insights, a lot of this data, including retention, churn, cost of customer acquisition, fee data on Avalanche is all available on the TIE terminal. And so if anybody's actually sitting in here who's a TIE customer, there's now a default dashboard that you can access, which dives deep on Avalanche. So that is my very quick overview with a lot of charts on Avalanche. If anybody has any questions, let me know.